What's up, everybody? My name is Jason, and welcome to Small Biz. In today's video, we're going to talk about a stock market warning as the S&P is a couple points away from the 5K level because the institutions just might be setting up the dumb retail money for a major rug pull. And the obvious question of this day is, did the news this morning in the C stock change the game or what? All that and more coming right out. All right, ladies and gentlemen, here I am. I may not look a lot better than I do yesterday, but I'm battling the flu. If you're new, welcome. We don't edit around here. I swear like a drunken fucking sailor. And come hell or high water, you'll never find me under the desk. I'll have to be 6 feet under or in an urn like my father in the other room to be prevented from doing my fucking job. So I want to talk briefly about the market that's dangerously overbought. I want to elaborate on the new hire today and what it actually means for the company in that stock. And if I have time and I'm not choking on phlegm, I will cover the HOLO fiasco and why I refuse to play that motherfucking game. Let's get something straight right out of the gate. Wall Street doesn't give a shit about you. I've been in this game 30 years, half of that as a broker from 93 to 07. In my personal opinion, is they could be setting dumb retail up for a major rug pull. You've got major institutions like JP Morgan and Morgan Stanley calling for a 1,500 point drop. Yeah, you heard me right. Down to around 3,500 in the S&P before the summer is out. And we're scratching 5K. So the rumor on the street is there's a lot of hedge funds and a lot of institutions that are caught short. They got run the fuck over with all this dumb retail money that's plowing in now at near 5,000 on the S&P instead of in October when I told you to buy the IWM at 162, last trade 195 and change. So what I think could be happening with the MACD, the RSI, the stochastics, my three indicators, the Williams oscillator, the Bollinger Bands, it's epically overbought in the Dow, the S&P, and the NASDAQ 100. It is not, however, overbought in the IWM, which is 3/4 of the way down to oversold. And we're starting to outperform. IWM's almost up almost 1% with the rest of the market flat to slightly down. So we could go sideways for a few weeks and allow the small caps to catch up. We're certainly seeing some firming in the stocks that we own, as a couple of them got upgraded from caution yellow to go ahead and buy at the limits with green. Or they may want the print. They may want the New York Times to put out, S&P record, we finally hit 5,000. And they'll have all the naked shorts, all the puts, all the covered calls, everything that they can capitalize on. And you mark my words, some major influential analysts are going to come out in the next few days because don't forget, the dot-com bubble burst in March of 2000. The markets fell apart during the scandemic of March 2020. March is typically a nasty month, and it's one that we normally see stocks come down. So do not be surprised if one of them comes out and says, we see some credit risk with respect to commercial real estate. You see the New York Community Bank at an all-time low of 4 and change yesterday. This could be round 2 of the regional fiasco. They got way too many bonds at 0% interest, and they've got all these offices across the country that there is nobody that wants to work because half of them, at least in the United States of America, prefer working from home. So we've got major credit default risk in certain parts of the market, and they may want to print this somewhere between 5,000 and, in my opinion, no higher than 5,100. Come out and say, we're in a massive secular bull market, like I've been saying for, 2 years now, and it's going to last another decade. But we're way out over our skis. And because of the risk we see in the commercial real estate market and, credit card spending, debts, household, etc., softening somewhat in real estate, we think the market needs a pullback. And the reason why I think it's going to happen this time to around 4,600 tops, what was resistance in July when we broke out will now become support. And the 50-day moving average is slightly above that. So we have a 5, to my opinion, no more than 7% drawdown coming from the most recent highs, which should occur in the next few days to a week. The reason why I think dumb retail is going to buy into that is because when clowns like Harry Dent come out and they say we're going down 86%, nobody believes it. Even when JP Morgan and Morgan Stanley say we're going down 1,500 fucking points in the next 3 months, nobody believes that. But if somebody credible comes out and says, we need to pull back to where we broke out in July, around 4,600. We need to kiss the 50-day moving averages once again. We need to assess the risk in the commercial real estate market and see if things are about to soften in a big way. The public, the dumb fucking retail will believe it. And the same a-holes that are buying the market right now at nosebleed levels will turn around and say, oh, looks like we got caught again with our pants down. We better get out. And then we'll come back down to a certain level that I just mentioned. And then it'll be time, in most cases, to load the motherfucking boat once again. But we could go sideways. We could have a rolling correction out of NVIDIA into small caps, out of this into that. But most likely there's going to be somewhat of a rug pull because we're way overbought on every technical indicator, which brings me to the C stock. Last trade, 1180, which I think is near the highs of the day. Not good enough for some of you, right? Not good enough for some of you. You see that fucking scam stock, HOLO. More on that in a second. And you think, oh, what are we sitting with these stocks? They're not even moving. Jason said this was going to happen. It did. The stock's only up 5.5%. The gentleman whose name will go unmentioned that was just hired changes the game. He was not a part of this company a month ago. Look at his resume. He's owned a couple of construction companies. He's got major ties into what you might call non-fiber optic industries like oil and gas and manufacturing. You're going to see a ton of new business come out over the next 2 months as a result of the guy who's now the president of the construction division of this company that we own a ton of, in and around where it is or slightly higher right now. So we were going from the outhouse of no revenue last year and knocking on Chapter 11 because they had a delay in their smart technology to now suddenly transforming into a major, what you might call fiber optic / construction company that is signing deals that have 7 and 10 year lockups. And unlike the fucking idiots over at StockTwits, who, again, in case you didn't see me yesterday, don't have a pot to piss in or a fucking window to throw it out, the ELOC, the equipment line of credit, is not being drawn upon immediately. Only 4.5% of the X million dollars has been drawn on in the last 7 months. They had to refile, unlike the asshole. There goes the shadow ban. Let me say that again. Unlike the asshole on StockTwits that's trying to tell everybody it's a new filing of a couple 100 million shares of dilution that's coming to the market right now. Wrong. So what do? We stick with our limits. We were at 10.07 in the pre-market yesterday. Last night, you could have bought it at 10.09. There isn't anybody in there, including people that joined in the last few days, that shouldn't have a full position by now. If you're in there chasing it at 11.78, you're making a huge mistake. And if I see you talking about it, paying 5 and 6% above the limits that I feel are the right ranges to accumulate, I'm going to either warn you or most likely fire you. And if you don't like that tone of voice, take your fucking business and go elsewhere. And with that said, in closing, why am I so very against HOLO and said sell it all at 26.5? Fact. Inside the Discord a couple of months ago, I said, stay away at 238. It went all the way down, and that was after a 75, 80% drop. It went all the way down from where I said stay away at 238 to 15 cents. So I saved people from a 90% ass whooping. They then did a reverse split. This week, a couple of days ago. The only people that have made any fucking money from $103 all the way down to $1.50 are the people that bought immediately after the split. And if you rode it from $1.50 to as high as $41.50, and probably 1% of you did, congratulations. You just caught a once-in-a-lifetime opportunity. But when I was screaming last night at 26.5 to sell it all, and I had to hear some asshole that DM'd me, there's 3 assholes. Let's make it 4, 5, and 6. Asshole, motherfucking asshole that DM'd me and said, well, it looks like it went up another $10. Yeah, where is it now? 22? You know where it's going? Back down under 10. This has absolutely nothing to do with the people of that country. Similar to what Vladimir Putin just told Tucker Carlson with respect to the people of this country. It's the hidden hand. It's the deep state. It's the 1% that run the world. If you think I'm going to allow or get behind a country and its companies that is the largest producer of fentanyl, that's pouring across a wide open motherfucking border and killing our men, women, and children, you got another thing coming. If you think I'm going to support a nation, a regime that's buying up our fucking farmland with the intention of controlling our food supply and, dare I say, poisoning our people, you got another thing coming. And if you think I'm going to support a commie site that starts with W in terms of trading your stocks that is stealing your personal information when they're known to be hacking, stealing, and hoarding our IP and cooking the books 24/7, you got another fucking thing coming, because guess what? There's plenty of companies right here in the good old US of A that we can make money with. So until next time, always remember that I love you, and thanks for watching. I believe that's an all-time profanity record.